down, and we'll go look at this. Just, you know what, actually, this is probably easier. I'll just go pull up the indices. We'll go to SPX 500. And we can pull this over here and see what's going on there. Okay.
Mara utewufuna abo what?
Sure. Oh, sorry. I was muting myself. I don't know why. All right. No problem. No problem, brother. Thank you very much for noticing that. So as we say that we are talking about NFP today, which is one of the biggest data that comes in every single month, right? Most of the economies in the world, they actually look at this data, although it's based in the United States, but it's very powerful because of it's very, very important in a way that it determines the future of movement of the economy. Yeah, no. Oh, cool. All right. So non-farm payroll, which is a lot of people, they already understand, it means non-farm payroll, which is NFP. Non-farm, what it means is that the people who are working in the farms, they are not included in this payroll. This payroll actually identifies people who are actually working and minus those who are working in non-government organization and those who are working in farms and so on and so forth. All right, so that's actually the simple way. And this report, it comes from the United States Bureau of Labor Statistics. So this is the same way that, Reserve Bank, Minister of Finance, when they come up with the release of how many people they are employed in South Africa, how many they are not employed, and so on and so forth. All those statistics, they're coming from the Bureau of the Labor. So here in South Africa, it's South African, Labor Bureau. And then in US, it's the Bureau of Labor Statistics. That's where exactly are these guys releasing the report. But what does this report actually mean, to us? That's most importantly to understand what this report actually means to us. So the non-farm payroll looks specific at a net changes in the employment rate in the US every month. The term non-farm is used since the farm and agricultural workers are not included in the employment figures. As I said, that is just a calculation of everyone else who are working except the NGOs and people who are working in a farm, or except the agricultural industry. That means the agricultural industry, they do have their own statistics, they do have their own payroll that comes in a specific day. All right. The decision to obtain these farming jobs lies in them being largely a season that could possibly produce a small temporary shift, and the labor report for this season, a certain government employs the private household employees, and the non-profit organization are also not included in this. So here is just explaining the reason why the farmers, they're not included is because the farmers, they're actually based on the season. So some season they make money, some season they're not making money. So it means the season that they're making money, they are contributing to the government of the United States or contributing to the economy of US. The time that they are not making money, they are not contributing to the economy of the United States. That is why this report, they are not included. They are actually, have their own report. Guys, if you have a questions or anything, please, you can send it on the chat box so that we can jump in and actually save the question that we're talking about. So why are the NFP figures relevant to the Forex market? Now, why is that the labor statistics in the United States, it's actually relevant or big in our industry that we do, in our trading industry? It is because of it's a driving force of the economy, and that actually translates to the stock market. Whatever is translating to the stock market can translate to the retail trader like us. So the NFP data is analyzed too closely because of its importance in identifying the rate of the economic growth and the inflation of the United States. The difference between the actual and non-farm data and expected figures are what determining the overall effect of the data has on the market. Now, there's two tricky words here. I'm sure pretty much some of the guys, they didn't get these. All right. There's the actual non-farm and there's expected figures, right? So each and every time, every month, the Labor Bureau have the statistics expecting how much this industry has to employ so that they can have more money coming to the government through, obviously, through tax. People paying tax, people buying products, and the economy start moving. So the actual, it's what comes out from the results that is going to happen in 4 minutes time right now. In 4 minutes time, we are going to see the results live, right? That's the actual. The expected is the figures that we actually, you know, being expected so that the figures can actually identify the future movement of the markets. Okay. Any questions there? Any question? We good? Okay, good. If the NFP is growing, this is good indication that the economy is actually also growing, and vice versa. If NFP is not growing, however, it actually means, you know, the economy itself is not growing. However, if the growth, its non-farm payroll occurs at a particular fast rate, this may lead to an increase in inflation. So what it means is that if there will be a lot of people who are actually not hired, if actually the growth, it's actually taking its own time to grow, it will reduce the interest rate. But if the growth is actually goes faster, remember that means the demand is actually high also for the government to supply these people that are trading, although they're paying tax, but the demand have been increased. What it means is that the Federal Reserve of the United States, they will increase the inflation, they will increase the interest rate for whatever that we are paying, so that they can be able to make more money based on their demand, because the demand is high. That means production has to be higher production of making to feed these people. There's a lot of people that are being hired, or a lot of, you know, in terms of law has to be generated to make sure that these people, they are fine, because of there's more people. Now they increase the interest rate so that we can pay a little bit more and they can be afford to actually, you know, to actually help us. It's fine, Mr. Shadrach. Can you hear me or not? If you cannot, try to log out and log in again. Try to log out and maybe log in again. If anyone who can't hear me, please let me know. All right. So here we all good. That's good. So here we're talking about how you're gonna treat that NFP, right? Two things. You have to know what is expectations, and know what is actual numbers that comes out. We have 1 minute or 2 minutes for the news release at the moment. 2 minutes for the news release. So in the Forex trading, the level of actual, in the Forex trading, the level of actual data, all right, guys, we are on the NFP, so definitely I'm jumping in just to show guys the chart. Just hold on a second. The market, no. See, NFP has just kicked in. Okay. I want to share with you just to see so that you can be able to see how this market does. Look at this volatility. Look at this. So you have to, this is how much people actually blow their accounts is because of now what it means the numbers are out. The numbers of NFP, they're actually out at possibly at the moment.
And this kind of doesn't make ADP look great. So 517,000 jobs created.
All right, 570 jobs have been created.
19,000 manufacturing
So I'm going to
jobs.
show you
So we're
again
looking at the,
how you
ISM
check
reports
these
thinking
things.
that the manufacturing
Look
was
at it.
shriveling and dying.
The US January payroll report increased
from,
to 570,
5%.
estimated 188.
Average hourly earnings come in.
Remember, we're talking
as
about the
expected,
actual,
4.3, which
and
turns
we're
in
talking about the
rate
estimation.
to 4.4%.
This is what
There's a base
exactly
effect in there,
it
and
means.
maybe some rounding on a 3-digit
Rise
number
at
because the
0.3%. What it
expectation was
means now, the
but it does
economy
show
of the
continued
United States
progress.
is actually
Average
doing good
hours,
at that particular time.
34.7.
It's because
That's
of
a
they've been
major
hiring a
jump
lot
for
of
that
people
category from
to come in
34.3.
board so that they
labor
can
force
be able to
participation
provide, or they can be able to start paying
62.4%. It was
things like taxes
62.3%.
and so on and so
we've had,
forth.
some major,
US
major,
general unemployment
gains here
rates
on the employment
falls
side,
to
and I guess,
3.4% versus
I think wages
3.5.
to get to the other
So this
countries
one, it
sort of
falls.
is, you know,
Again, the
shaking and
earnings,
jumping
the
up and down.
hourly earnings,
This is
how much
this is
people getting paid in an hour rise to
because we see a big
4.4%.
gain in
They
jobs
were
without
estimated
big
to rise at a
in earnings,
4.3%.
and that's
You
gonna
can
matter to
see
the
all the
Fed.
yields, all the instruments based on the dollar, they are actually falling. But if you look, maybe if we check
4%
Nasdaq,
is a little
let's look at Nasdaq, one of the biggest stocks
month over month, but wow,
of the
another
markets.
move in the market. Equity futures down on the S&P by 1% on the S&P.
The equity
500.
futures, oh,
Moves
they're
in the bond
down.
market. You can guess the moves in the bond market. The yield's higher by 9 or
here
10
you
basis
go.
points, right the way through the front of the curve. The 2-year up by 10 basis points to about 420.
Falling
now.
again.
The 10-year yield, we are
But you can see
basis points.
that the volatility of these four,
That's where
it's
the
actually
FX
going to
market,
pull
I think
all the
it's
way
as well.
coming to this
Euro dollar,
level.
negative.
This
A
is the
break of
level
109
that actually the market is coming. By the end of this announcement,
Here's what we call
it will be
T-
sitting at
a
this
live
level.
jobs report.
Of the headline numbers, I take that.
It will be sitting at this level.
17,000. I
All
have
right.
a month revision. There's 2-month revisions as
Again.
well. And it's a small number of 554,000.
The rate has fallen, but the employment has increased.
Before, but is the shock of
You
these
can see the
numbers
instrument
was
S&P 500.
pandemic-
Now, here's where there's a tricky about these numbers today. If you didn't follow the market yesterday, what happened yesterday, and you come jumping and actually trying to trade today, you're out of the game because you don't know what happened yesterday. So yesterday, all the tech companies, they were actually, they were releasing the earnings, and all those earnings, they fall on a negative. Now, most biggest company in the United States that brings a lot of money in their economy, they are technology companies. One of them is Apple. It's the biggest company in the US. It actually, sponsors also China because of most of production is made in China. Because of there's a lot of people and the cheaper labor and so on and so forth. Now, those earnings yesterday, they lose. So they released the report of the whole year, how much they've been making. They actually fall down for since 2019. So since COVID-19 started, this is the second time that companies like Apple fall, companies like, companies like Alphabetical, which is Google, for companies like Amazon, they're not making money. So this is the reason why, although they hire a lot of people, but the companies didn't make more money. That is why we are seeing rage in the market. That is why we are seeing this is rage. We look at gold, we're looking at rate falling. These two instruments, they are not supposed to work together. Nasdaq is not supposed to fall at the same time. Gold is not supposed to fall at the same time. When the Nasdaq is falling, gold is supposed to go all the way up, spiking all the way up. But the reason why all these instruments, US30, let's look at the US30, how it's performing at the particular time. US30, again, falling. USDT started after the release of the news all the way to 33,826 from 34, spiking all the way to 33K, right? That's a big move, this one. We might look at a small move, but let's look at it a small time frame. Look at this small 15 minutes time frame. And it's going to continue to drop based on the companies that happened last week, the earnings that comes based on the earnings that come last week. Those earnings, they're the ones that are actually making sure that the fall of the market is actually happening at a particular time. No matter how much you employ a lot of people, but if the company is not making money, it actually means everything in terms of the stock, everything about the economy, it will actually fall, because company is not going to pay a lot of money to people so that those people can pay a lot of money in taxes, in tax form, right? So actually, that's actually what we are seeing currently in the market. Any questions regarding what we are seeing in NFP? Anything? Any question for NFP? If you can't unmute and speak, you can actually type on the chat box. You can actually type on the chat box. There's no problem, right? Now, lady, it's unmute. You need to mute the mic. You need to unmute.
Hi.
Hello.
Hello, everybody. Yeah, I wanted to ask, we keep on holding the trades, right?
Right now, if they trade, they are on a profit, take the profit. Because you see, and you were trading gold, you're supposed to be in a big profit at the moment. So if you're trading in a profit as a sell, close the profit at the moment. Because what will happen here, this trade will pull back. You see it's starting pulling all the way, bit by bit, going all the way up. It will pull back. What it's doing is going to release people that don't have enough money in the market, taking them out, cleaning everyone who don't have enough money in the market, and then start again, form another sell. So to avoid blowing, when it comes like this, you close, you take your profit, you put it on the 15 minutes, wait for another candlestick where it's going to go. Because now the NFP is done. It has released, it shows where it's going, but it's going to play with the traders. It will go all the way up and come back again. Same as I think Nasdaq, it's going to do the same thing. It might form maybe another candlestick and fill this gap all the way, and then form another candlestick and start dropping. And don't forget, 4:30, it's a New York session. Anything can happen again on a New York session, on a session open. So for now, you can take the profit.
Okay, after taking the profits, then do we open another trade or what?
No, you wait until another candlestick starts, until another candlestick starting up, then you decide. Even if most of the time I will wait for maybe, you see now I've already make money. I will wait until 4 o'clock. So I'll give it 20 minutes. I'll give it 20 minutes the market to do whatever that they want to do. Because now it already showed me the tricky part. If I follow as a sell, continue with a sell, another candlestick is going to come, retest all the way up and still continue coming back down. Although I know that the market is going down, but at the same point, I understand that it might go all the way up again. Or what you do, you wait until maybe 15:45 if you are checking your trades on 15 minutes time frame. 15:45, you close the trade. Then you give it until maybe it get to 4 o'clock. 4 o'clock, you start again afresh.
So now I can open and close, open and close.
Yeah, as long as you're not making a loss, as long as it's a profit.
Okay.
Yeah.
Okay.
All right.
Thank
you. No problem. Okay, now we have seen how NFP actually impacts. I only have 10 minutes left to finish the Zoom. I hope we're gonna I'm gonna make it in terms of the time. Okay. All right. So again, we're talking about in the forex trading, the level of actual and non-farm payroll compared to the estimated to estimate is what makes the biggest impact. What we see in terms of actual numbers and what NFP was expected, this is what makes it the biggest, the volatility. So if, let's say, for example, right now, the numbers has go above the actual, what they were actually estimated, the actual number, they go above what they were expecting, that means we might expecting the positivity of the trades. But sometimes it comes below the estimated, you might understand that it shows again, you know, it might show the negativity of the market. But it doesn't only affect the US dollar. With the US economy being one of the largest in the world and the USD being the most traded currency, these figures have a knock-on effect of the currency pairs. So these figures that just come out is not only based on the United States dollar, it actually also affects the other currency pairs. So you can go and look at the different currency pairs. You see that they also have a volatility based on the numbers that just actually, you know, come out. A little bit of pros and cons that we should be aware in terms of, you know, NFP was more market movement than usual, meaning there is a chance to make a big trades, like what we see, a big volatility movement, a good for aggressive trader. It's good if you are, you know, like Naledi there who asked, should I go in and come out? Aggressive traders go in, take money, come back, go in again, make profit out. It's good for aggressive trader because there is a volatility that pushes the price all the way up. The cons, the spread widened due to the market volatility. Most of the brokers during right now, I'm telling you, if you have a friend who's trading in another broker, ask them, they will tell you that, you know, the market was freezed or something happened. It's because of highly volatility of the market. Spikes and more likely with the, you know, can stop you out. So there's a spike like what we see, it can touches your stop loss immediately. If you use the stop loss and take you out of the game, need to be very, very smart when you're trading NFP. Not good for conservative traders. It's not good for people that just come in and, you know, relax and wanna trade. So the US, I know non-farm payroll, the NFP, it actually also explains the non-farm payroll report is one of the two surveys conducted by the Bureau, by the Labor Bureau that tracks the US unemployment. The establishment survey, this survey provided details of non-farm payroll employment, tracking the numbers of the job addition by the industry, the average numbers of the hours worked and the average hourly earnings. That survey in the basis of the report, total non-farm payroll added on each month. As we've seen how much people they're getting paid in hour, how much they're getting, they're employed, how many they're employed, and how many hours these guys they're actually, you know, trading. That's what determines this report. The household survey, this survey breaks down the employment numbers on a demographic basis, studying the jobs rate by the race, gender, education, age. This survey is also a basis for the monthly unemployment rate reported in each and every single month. So that's actually the report based on people who are educated, you know, what industry are you working, which industry is actually employed more people. So if you and me were investors, we're not going to invest to the company that actually have few employment. It means they're not making money. The productivity is short. We're gonna invest the company that has a little bit of more people because it shows that the productivity that they're making is high, it makes more money. And gold is still pushing down. Yes, let's keep on pushing, making money on this gold, man. This gold, we need to come out at least with 10,000 rand each, a minimum for everyone. At least the minimum for everyone. So there's a 4 figures from the NFP, from non-farm payroll. There's always a 4 figures reported by attention to. So investors look for specific other several figures within the job report. So within the report that comes in, the investors have the specific thing that they are looking for. The employment rate is the critical in assessing in economy health of US. So there's a Department of Health that actually contributed in a non-farm payroll in a report. And it also factors in the Federal Reserve assessment of the national labor market and the potential for the future recession. The higher than expected unemployment could push investment away from the stocks and towards the asset that they consider more safe, such as treasure, potentially trigger decline and the stock market. Unemployment sectors active, the non-farm payroll report also examine the employment activity in a specific business sectors like construction, manufacturing, and health. Just to be clear about the report that comes in, remember we said it excludes people who are working on the farmers, and it excludes people who are part of non-governmental organizations, but it includes people who are working in manufacturing companies, health sectors, and the construction industry. Any significant rise or fall in a sector's employment can impact on the financial markets, investment decision on the sector itself. Okay. So as we say, you want to see the average hourly wages. So it has to determine how much money they're making in an average in a month, right? Investor may consider average hourly pay, barometer of overall of US economy health. Rising wages may indicate a strong consumer confidence and more rebound economy. So that scenario could lead to a rising of a stock market. However, increasing of average wages may also significant future inflation. This is what we've seen already, which could investors to sell stocks as they anticipating the interest rate hike by the Federal Reserve. See now what we just see. This is what we see now in the market. So the future of oh shit.
Can I ask?
Yes.
Sorry, can we still put more? Can we still put sell trades on gold?
I'm not supposed to advise you what to do. I'm not here to advise you or to tell you what to trade, what to not to trade. So I can't tell you whether you sell or not. My job is not to tell you what to trade. My job is to explain to you what trades are. We good? Yeah. Okay. So the scenario could lead also the rising of the stock market. However, it increased the average hourly wages, may also significantly future inflation, which could cause the investors to sell the stocks. This is what we just saw right now. The numbers of NFP, they were actually increased than the estimation, right? Immediately, what numbers increased, it's significantly to a future inflation. So again, already, it shows the future inflation that is coming. Now, already we are sitting at 25 basis points, which comes yesterday. I've already said it. If you missed the report yesterday, the NFP is not going to make sense. So you must always understand what Feds already did. The Feds already give us 25 basis points, which is also South Africa. They copy what US they are doing. They already give us also 25 basis points, which means the economy is doing good when they give us 25 basis points. That is why the number of people who are employed, it seems high. So what is coming after is the inflation rate.
also
So we are expecting the inflation hike. That is why we can see the stocks